Happy Friday, everybody.
Hello.
Hello.
Hi.
Hi. So we are speaking on a topic today that I know a lot of our clients, a lot of the public have questions about, which is long-term care insurance, long-term care in general as well, questions and things to know. We have amazing guests here today from Northwestern Mutual, and Karin Larrave is here along with Richard Asel. So we're so glad to have y'all. And we're just going to jump right in.
And we're going to talk about long-term care insurance and the importance of planning for long-term care. What does it pay for? And I know with our aging population, people are getting older, living longer. And, I read a statistic today that to be in a nursing home for 1 year is $77,000. That is the cost to the resident, whether it be through government assistance, whether it be private pay, through long-term care insurance. So this is another one of those topics, we have to be having these conversations with our adult children, with our parents, with family members. So I don't know if those listening are providing care for someone or you're worried about the financial impact. I can tell you right now, my mother has dementia. She's had it for 7 years. She is in a group home. And yes, we worry every month when we see that account dwindling down. And we don't know how long she has. She's on hospice, and I got a call from the hospice doctor that she may not keep criteria to stay on hospice. And we count on that. We count on the nurse visits, the supplies, the equipment. So it's a very real topic for all of us. So can we just, y'all share with us why you're here? Tell us how you're here to help the consumer.
Well, first, I'm excited. Thank you for the opportunity. My partner and I, we have a calling to be planners and help our clients to really see how to protect their wealth, but at the same time how to leave legacies. And long-term care is really one of the more hardest topics to talk. So because families put it aside, they don't want it to maybe address it, and then especially males. So that's why I'm excited both of us are here.
Yeah, I mean, when you talk to people about long-term care, if they've gone through a long-term care situation, whether it's been with a family member or something, they're generally real apt to talk to it. They'll be on top of it and want to talk to us about it. For the people that have never experienced it, they don't understand. And I think as you see people living longer, the statistics saying that 70% of Americans that reach the age of 65 will have some sort of long-term care incident in their lifetime. It's an important piece that we need to make sure that we're taking care of.
So how do we start? How do they start with the conversation?
A lot of times what I found is first of all, you need to see what their experience is and what are they worried about. What are they looking for, and making sure that they keep their dignity, making sure that their family members are protected, making sure they take some of the burden off of the people that are going to be left behind after they're gone. So what we'll do is we'll go through a process of just asking them those questions and trying to understand exactly what it is that they're looking for.
Okay. And Richard said education. This is very important. Sometimes people read articles or have these misconceptions, so having a trustworthy advisor that can take the time to educate you what is the options, because the average age of caregivers are 49. This is 49 years old. Can you imagine struggling with your career, with your family, plus taking care of a family can really impact your entire lives. So the idea is for us to be sure that you have a plan and you understand the contracts, you understand the fine printing, and you be not surprised.
Well, and as an RN too, working with seniors, nobody says, you know what, when I turn 85, I would love to move to a nursing home. So put me in a wonderful room with a view of,
buildings,
the trash can buildings. So you're an advocate for your client, and they come in and say, tell me about long-term care insurance. Why do I need it? How is that going to benefit me? How is that going to protect my family? So I come in with those questions.
Sure.
Tell me why I need long-term care insurance.
Well, I mean, the biggest thing is that, there's three things that get affected when somebody has some sort of long-term care incident. basically you've got a financial aspect. Okay, so in general, like you said, $77,000 a year on average. You know, we have some clients that are spending $120,000 to $200,000 a year, depending on the level of care that they're looking for. The other thing that's important to know is that it's not only the financial burden, but it's also the physical burden. The physical burden of actually having to take care of somebody, lift somebody out of a bed, move them from one place to another. That's going to hurt your lifespan if you're the caregiver, just because physically it's going to be such a burden for you. And then the emotional side, where you have this feeling of guilt that you have to take care of your parents. Well, like Karin said, is that if you're 49 years old and you're living in the prime of your life with your family, not only are you taking care of probably children, but now you're having to take care of your parents as well. And you feel that obligation, and it tears you apart, because not only are you dealing with the problems that we all deal with as parents or whatever that might be, but now you also have the additional obligation of being there and making sure that your family members taken care of in a long-term care situation. That can pull relationships apart. That can ruin, you know, a lot of people's family lives.
I like that Richard mentioned that, because sometimes people, they don't address that emotional part, and it's one of the most important ones to be sure that it's going to happen if you don't plan. If you don't plan, you're going to face something that is not fun. Mm-hmm. And also I wanted to address, maybe mention that nearly 41% of the long-term care is provided to people under 65 years old. People think it's because someone with Alzheimer's, with Parkinson. No. And that to get protection, you need to be healthy. So a lot of people think, I'm going to wait. But maybe at that time you wait, you're too late for you to get an
So what are some examples of people under 65, like a catastrophic accident? Give me some examples of why somebody my age why it would benefit for myself to have long-term care insurance.
Sure. Well, I mean, I'll give you an example of my mother-in-law. She was 19 when she was diagnosed with MS. Well, she needed long-term care, but she was never able to get it because she was diagnosed when she was 19 years old. That kind of stuff happens. My aunt was diagnosed with MS at 35. My sister was diagnosed at 24. Having a family history of MS, that made me want to go get long-term care before they checked to make sure I wasn't going to have it. You know, you see people that maybe have strokes early on. You see people that have, medical issues where maybe we're more active and maybe some part of our body gives out. You know, those are all reasons why before the age of 65 you're going to see people that might have these issues. Well, I mean, we'll talk about sports, you know, these cognitive impairments that these guys have from CTE or whatever that might be. Those are all specific reasons why those long-term care policies would actually pay a claim, so that can help benefit them. And a lot of people think I have to be in a nursing home to get this money. You don't.
Well, and that was my next question. We do private duty. We take care of patients in their homes. We do take care of some in assisted livings and have a private caregiver with them. But most of our clients do want to age in place at home. And so are the policies specific to being able to stay at home? How does the consumer know? I had an example of a patient that was on hospice. They filed the claim for their long-term care insurance, and he had 2 months to live. The insurance would not pay on the claim because he had to move to a nursing home. He had paid in $111,000 to this claim, and I argued with the long-term care people, and they were like, "I'm sorry, this is what the policy said." So, how can you protect? It's really, you've got to have that conversation. That's another one of those hard conversations we don't like to talk about. But what do you want, Mom? What do you want if you were to get to this point where you had to have care? Do you want to be at home? Do you want to go to a nursing home? Well, I want you and your brother and sister to take care of me. Right. So if that's not an option, but how does the consumer make sure their specific needs, to the best of the policy's ability, will be met?
Well, I think for me is to understand that long-term care is about, if one day I cannot do 2 of the 6 daily activities by myself, I will be the option to have some income coming to pay for someone help me in my house or if I need to move or I want to move to an assisting place, I have that option.
And so explain what activities of daily living are, because that's real important in those policies.
Yes, it's like if you cannot dress yourself, bathing, transporting, continence, so the daily activities. So we have a list of 6, and then you need to be sure that your doctor, maybe said, it's not safe for you to be living alone. A lot of women, divorced or widows, they live alone with conditions that is not safe. Like I share my own personal case. I have epilepsy, thank God, under control. And I got my policies years ago, and then I had one seizure after 10 years, and I realized if I didn't have my policies in the past, I will never be able to get it. And then I think in the future, if I'm alone, most likely I will maybe need some help. Now I know I have options. I will never be a burden to my kids. I can leave a legacy. So as you said, it's an emotional conversation that we need to be open to address and respect the wishes of our loved ones.
I think it's important to note real quick that when you're thinking of long-term care insurance and when to get policies, think of car insurance, think of house insurance, renter's insurance, life insurance, all those things that we get beforehand to make sure that we're covered in the event that we do need it.
Right.
It's the exact same mentality that we need to have when we're looking into long-term care insurance and the policies. It's the same type of thing when you look for car insurance.
Sure.
You're going to have different coverages, different, everything's going to be different about the policies. And it's a good way, that's kind of a good way that I think of long-term care insurance as well,
Right.
in terms of just making sure that it's in place for the event that it is needed.
Right. Nobody wants insurance, when they don't need it. But they want insurance when they can't get it.
Right.
That's when everybody wants it.
And if you rush it to buy it because you buy your car insurance thinking it's just the price because it's cheaper, and you don't pay attention when you get in a wreck, maybe you wish, why didn't I buy this all full coverage?
Yes.
In the long-term care thing, for me, was interesting to know that if I need a contract that is hands-on or standby. So people need to get educated. What is the difference? Okay, if you only have a policy that covers hands-on, you need to be in a position that you need to be touched to get helped. But if you have that standby, it's something that you can be with someone in your house. Just be sure that you're safe.
Well,
What would be the difference between that?
Well, the hands-on policy means that they don't pay a claim until you're actually moved or touched by the person, the caregiver. If you have someone who's there 24 hours a day just to watch over you to make sure that you're okay, sometimes those policies don't pay.
Okay.
Okay. When you look at some of the older policies that are out there, that's where I think the long-term care insurance industry got a bad name, is because they were very limited on what they would cover and what they don't cover. Now, I will tell you that most policies will cover the majority of things that you could ever come across. Now, obviously, there's going to be exceptions, but in most reputable companies, you want to make sure the company's a strong, insurance company, but most of those will cover the things that you want it to cover. Obviously, getting educated, like Karin said, on making sure that they do specific things based upon what you want them to do, and understanding that fine print. That's where the benefit of having a professional look at it with you might help, because it's another set of eyes looking at that situation. But, if I know that it covers, home health care, assisted living, nursing home care, then also, like in the situation that you had, if I had paid in a bunch of money and then they wouldn't pay because it was something that was written out of the contract, well, are there other stipulations to that? A lot of times people think that long-term care insurance is this standalone policy, a lot like car insurance. If I never use it, I don't get the benefit of it, and that's why people are sometimes apprehensive to buy it. Now you've got different types of contracts that are out there that are more a hybrid type of policy, where you might have a long-term care benefit attached to a life insurance policy. So if you don't use it, the life insurance will then at least pay out. So somebody's going to get the money. And people are a little bit more accepting of those policies. The problem with those is they're going to be a little bit more expensive because they do have the life insurance component to it. So that's why getting it younger makes a lot more sense, because then it's not as expensive.
Well, and we have clients that they may be in the hospital and they have supplemental insurance, and they get confused and think that's long-term care insurance. And they'll call the supplemental, and the supplemental policy will say, yes, you do have benefits for nursing. Yes, you do have benefits for therapies. And then I get on the phone with them and I'm like, you need to be specific with your customers on what they're getting because they're confused. And so I kind of have to be the bad cop, you know, and just explain. So tell the listener the difference between supplemental insurance so people understand compared to long-term care insurance.
Right. Well, I mean, generally, anything that's an acute condition that you're going to get better from, that's what generally those supplemental policies will cover. Okay? Anytime that you have something that's going to last forever and you're never going to get better, that's where long-term care would kick in. Okay? And so that's where, and a lot of people will think that the government's going to pay for them. Medicare pays for it. No, it doesn't. Medicare pays a partial amount through the first 100 days, but after that, you don't get any kind of long-term care. And generally, if people say the government's going to pay for it, the only government assistance you get in long-term care is Medicaid, and the only way you get Medicaid is if you're poor. And so, you know, you see a lot of times that attorneys will come in and try and switch around people's assets to go from one family member to another to make someone basically look poor so that they could get government assistance. So then you have to ask clients or prospective clients, do you really want government long-term care? Because your choices are very limited, and the type of care that you get is also not the best type of care. Ask any veteran, okay? I mean, it's one of the areas where you might see things that you read about on TV or some of the improper ways that people get taken care of. A lot of times that happens in these lower end long-term care facilities.
And also people get confused. They said, oh yeah, I have disability insurance. If I become disabled, I will have some of my income protected. So when you really do the planning, you realize that's the money that is going to be around 60% and depends on the type of disability you have. Maybe it could be tax-free, taxable. So maybe that is the money that is going to help you to have your living expenses, but not really to pay for care. So the disability is something to cover your lifestyle basics, but the long-term care is going to cover your care. So they complement each other. Right?
Yeah, and
so
disability will run out at age 65 anyway.
Exactly.
So you won't get that anymore.
Well, and speaking of veterans, is there, with the VA benefits that veterans have, I mean, it obviously is a good idea for everybody to invest in long-term care insurance, but what, do those work together?
They can, yeah.
Okay.
Yeah, I mean, the way that you look at the veterans benefits, those are given, right? They're earned, obviously, by their service, but they're given, and they're free.
So it doesn't compete with
anything that's free
supplemental. Okay.
Generally isn't awesome. Right, so it depends on the level of care and kind of the options that you want whenever you have a situation. And obviously, we don't know that when we buy the policies. We don't know what's going to happen to us in the future. But if I want to know that I have the option to stay home, I have the option to go to an assisted living facility or the option to go to nursing home, obviously it's all based on medical need. But if I have those choices, I'm going to feel a lot better than if I'm strictly relying on the government to take care of me, because also those veteran benefits, they could always get taken away. You don't control what the government's going to decide to do with all those benefits.
Wow.
You know, me as a woman too, it's a study that says that women who leave the labor force early because of a caregiving responsibility will lose an estimated $325,000 in wages and Social Security benefits. So for women that will live longer, and normally it's kind of expected that we'll be the caregivers, it's important for us to be the advocates to sit down and talk about it.
Well, and we have so many clients too that they expect their adult children to drop everything.
Exactly.
And you know, they've got children. It's hard as that sandwich generation. That's me, because my father passed away a few months ago. My mother's on hospice with dementia, and I still have a family. And so it's impossible you can't do everything, you know. And so just having that additional support would be so beneficial. And I was reading that the average nursing home is $200 a day. So tell me, with that perfect policy, you know, as you've gotten to know me, how much would that pay? What is the average that they pay for a policy? Say it's $200 a day. Is that, tell me about what kind of policy I would need to cover 100% for a nursing home, let's say, for $200 a day.
Sure. Well, one thing that's important to understand is now long-term care insurance used to have a lifetime benefit where it would never run out. Those days are gone. Okay, there's not a policy out there that pays lifetime anymore. If you have one, hold on to it. Don't get rid of it. Even if they raise the rates, you want to keep it. All right. But now with the ability to have specific length of time policies, so like a 6 year, 5 year, 10 year, whatever the length of time that you pick, that's all going to affect the cost that you pay, the premiums that you're paying. For, let's just say, a 45-year-old, if they want to go ahead and get a long-term care insurance policy, that's a standalone policy that pays $6,000 a month. In general, for a gentleman, it's going to be less expensive than a lady, because if you look at nursing homes, there are more ladies than there are men there.
They live longer.
Yeah, for the older men that are in nursing homes that like the community environment, they're like, I'm dating. They've got a ton of people that they can go date, right?
They
so,
do.
but the
women love it when,
Oh, yeah.
when a man moves in.
Yeah, they're like, hey, there's a new guy. So, but no, I mean, for gentlemen, they're going to be less expensive. Ladies are generally 40% more in price.
Wow.
And so that's why it's important to get, and there's very few companies, I don't know of a whole lot of companies anymore that are unisex or that they don't have they're sex neutral when it comes to their pricing, okay? Most have gone to male-female pricing. On a male, generally you're going to spend on $6,000 a month at 45, probably about $100 a month for that policy. For the ladies, it's going to be about $180.
Okay.
Okay, depending on health too. That also is an issue. I mean, one of the biggest problems, a lot of people say, well, I'll wait till I'm 60 to buy it. Well, that doesn't necessarily make sense, because obviously the cost goes up, but the cost isn't that's not the deciding factor in that, because it does go up, but it's not a dramatic increase in general. What you're going to find is that the difference between getting it at age 40 versus getting it at age 60, there's a 50% less chance that you'll get approved. So you lose your ability to get approved by 50% waiting. And it's because of health-related reasons. Most of us do not get healthier as we get older. And if you get declined and the health is a situation that doesn't improve, you're not going to be able to get it. And like we said before, those are the ones, when I need it and when I want it, if I can't get it, then I'm in trouble. And so that you got to make sure that you plan for that. If you have family history of living long, if you have family history of any kind of, any kind of diseases or situations that you might have to deal with Alzheimer's or dementia, you might want to go ahead and get it early before you're even diagnosed with any kind of, early onset stuff.
And the way to compensate that is not a lifetime benefit anymore, maybe in the planning, if you have longevity in your family, situations like Richard's family, maybe you try to get a little more benefit, because if you don't spend the whole monthly benefit, you can keep it in your account. So you can stretch that contract. Instead of covering only 6 years, you can stretch it for 10 years. So that's why it's very important to analyze each case individually.
In most contracts, what you're buying is a amount of money, amount of benefit, and that can be divided by 6 years, 10 years, whatever it might be. But if and you will not generally exhaust it until the contract is not up until you exhaust that amount.
Okay, now we have some clients that have said, I need care, but I want to wait for the grace period to kick in. So I want 1 day of care, and then when my grace period is over, can I get 7 days? So and to me that just sounds, I don't know, kind of sneaky. I don't know. But is that how it works, that grace period? So if they even though they need care 7 days a week, they can do the 1 day a week, and then they should be able to start after the grace period. They should be able to collect.
Right. A lot of times, it depends on the contract and which company that you have your policy with. Some companies will say that you have to have 90 days consecutive before they'll kick in.
That's why the contract.
Yeah.
Right.
Some companies will say 1 day counts for that week. And so yes, you can, I guess, not manipulate the system. They still need the care, but that's their choice on what they're doing. And and also it's very important to understand that whenever people do buy long-term care insurance, and there is that grace period or that elimination period, which is kind of like a deductible, basically, they need to have funds to be able to pay for that.
Okay, so explain the grace period, because I was surprised about that too. Just explain how that works.
You need to plan for the first 90 days to have an emergency fund that will pay for your care. and after 90 days, you can claim, I need to use my money from my long-term care to pay for my care. So it's
the elimination periods are put in basically to basically show the insurance company that this really is true, like it's a true claim before they start paying out. Now, as a consumer, I can buy a shorter elimination period. I could do a 30-day elimination period.
That was going to be my question.
I just pay a higher price.
You pay a higher price.
Okay. I can also bump it back a year, 2 years. I mean, it just depends on whether I have assets that I want to use, or if I have, if I want to get the access to the claim earlier. So it just really depends on the client and what they're willing to spend premium-wise.
In the process of planning, that's what is happening. We need to see what is the story, what is the situation, and then sometimes you don't need to pay for an insurance 90 days. What about 6 months or a year? Or
and that can lower the overall cost, so that it makes it more affordable for them. Because really what you're trying to protect, obviously, is the catastrophic and trying to save their assets from the insurance, or I'm sorry, from the long-term care incident eating away all their retirement assets.
So if somebody, say, is healthy, has to have hip replacement, they've got long-term care insurance, it's going to be out a 2-week window of recovery, and they're hoping to get back to work. So if they filed for that long-term care, more than likely it would not.
No.
Okay.
No. But if after, the therapy, he lives alone, and then it's a little dangerous for him to bathe because he can fall, or, the doctor said from the 6 daily activities, 2 of them, I kind of think you need someone around, maybe he can request that
some
benefit to help him transporting, or, just cooking or bathing him.
Well, and in that situation, that's an acute situation, right? He should generally get better from that,
right?
Right. So a lot of times there's certain policies that will say, okay, yeah, you can go ahead and claim, but then when you get back to normal, you'll go off claim and have to pick up your premiums again.
And then you'd have that grace period all over again.
In some cases, yes. In some cases, not. It just depends on the contract.
Okay.
I have 2 doctors, young doctors, and when we did the planning, they were really worried about the mom and the mother-in-law. So in the overall planning, we thought, okay, you're going to be responsible for these 2 ladies. So they bought long-term care. At that time was lifetime benefit, $8,000 a month. 10 years after, they called me. The mother got Parkinson and the mother-in-law got Alzheimer's. And said, Karin, we pay nothing now. My mom and my mother-in-law, they're taking care beautifully. Can you imagine today coming up with $16,000 a month to give the care? And the dignity it was priceless.
Thank you so much. This has been so informative. It's helped me so much, and I'm a healthcare professional, and there's just such a huge maze out there you don't know. But you guys have been awesome. If you'll give your name again, phone number, how our listeners can contact you if they have any questions on long-term care insurance and policies, and we'd love you guys to be a resource for them.
Thank you. My name is Karin Larrave, and my number is 214-525-1077, Northwestern Mutual.
My name's Richard Asel, and my telephone number is 214-537-2735 at Northwestern Mutual as well. And Karin and I have been partners now for about 8 years,
Oh, wow, that's amazing.
And the good news is we can represent any company. So we're not really only Northwestern Mutual advocates. We will see what is the best out there and to give you the best recommendation.
That's great.
Well, it's mainly planning. Like at the end of the day, it's planning, and it's making sure that we're having those conversations. That's that's the biggest goal of our podcast, is to encourage families and encourage people
to communicate.
To communicate and just lay it on the line. It is what it is. We need to plan, just so we're not in those binds for those catastrophic events, and when we're aging. It's just so important. So y'all have been amazing.
It's all contingency plans. If you can come up with contingency plans, then everything's okay.
Yeah.
Thank you so much.
Absolutely.
You're welcome. Thank you for the invitation.
Like us on Facebook. Share this. We're also, our 2 guests are tagged. Leave questions, comments. We appreciate you. See you next week.
Thanks.